If you are looking for great long-term buys in this recent stock market crash, you are perfectly right here. I'm Dan from the Investment ABC, your guide through the stock market jungle, and in this video I want to analyze Boeing. I'm looking myself at companies which could be long-term attractive for my portfolio, so I had a look into Boeing and want to share my analysis here with you guys. Boeing is next to Airbus the biggest aerospace company in the world, so it has only one strong competitor and operates in an almost duopoly, which gives the company a really strong moat. It is very tough to produce airplanes and you need a lot of money and government connections to enter the space. As an investor, I love companies with a strong moat, so Boeing is ticking the box here. Boeing is generating its revenue mostly from these three segments. Number one is commercial airplanes, which generates 42% of all revenues. This segment develops commercial airplanes and provides fleet support services to the commercial airline industry worldwide. The second segment is the defense, space and security systems, which has 34% of all revenues. This segment is engaged in the research, development, production and modification of manned and unmanned military aircraft and weapons systems. The third segment is the global services, which generates 24% of all Boeing's revenue. This segment provides services to Boeing's commercial and defense customers worldwide. Boeing's total revenue for the year 2019 was $76.6 billion compared to $101.1 billion in 2018. This is a decrease of 24%. Boeing had a rough last year with some big problems. Their biggest problem was the grounding of their 737 MAX commercial airplane after two incidents. Boeing harmed its reputation in the way they handled the issue and had to admit in the end that the incidents happened because of the technical problems with their airplanes. Boeing has developed software and training updates for the 737 MAX and continues to work with the authorities to complete remaining steps towards certification and removing safety issues. Boeing is expecting to get its airplane back to service in the fourth quarter of 2020. The company does not only have problems in its commercial airplane segment, but also in its defense, space and security segment, in which the biggest customer is the US government. Boeing has also in this segment safety issues with their KC-46. If we have a look at Boeing's chart now, we can see that Boeing made its high in March 2019 with around $445 and declined steadily because of all the company-specific problems to around $350 in February 2020. All of us know what happened then. Travels around the globe got banned and is currently still banned. Many airline companies are on the verge of bankruptcy and there is not really much information when people can start to travel again. The stock price started to plummet to a low of almost $88 in March 2020. This was an almost 80% decline from the all-time highs, which devastated complacent investors. Currently, the price recovered to almost $152 as of the 10th of April 2020. The question now for us investors is whether it is a long-term buy at current price levels or not. Some of my friends asked me back in early 2019 if Boeing was a good buy, and I clearly told them no, Boeing is overvalued. Today, the answer is a little bit harder, so we have to dig into the numbers properly. After knowing the problems of Boeing, let's dig into some numbers and metrics. Boeing's net income for the year 2019 declined to negative $636 million from $10.46 billion in 2018. Boeing's earnings per share declined from $17.85 to negative $1.12. Free cash flow declined from $13.5 billion to negative $4.4 billion. If we have a look at the revenues for each of the three segments, we can see that the commercial airplane segment took the largest hit. Revenues declined from $57.5 billion in 2018 to $32.2 billion in 2019. Earnings from operations declined from $7.83 billion to negative $6.6 billion in the same period. The defense, space and security system segment had almost stable revenues in 2019 compared to 2018 with $26.2 billion. Earnings operations, on the other hand, jumped significantly in 2019 from $1.65 billion in 2018 to $2.6 billion in 2019. Revenues for the global service segments increased from $17 billion in 2018 to almost $18.5 billion in 2019. And earnings from operations rose from $2.5 billion to almost $2.7 billion in the same period. So we can see that the biggest segment, the commercial airline segment, is only suffering from declining numbers, while the other two are healthy and most likely will grow further in the next few years. Let's have a look at some of the key metrics and numbers for 2019 to value Boeing and compare them later to Airbus. What we can see is that Boeing's cost of revenue is pretty high with 94%. That means it costs Boeing 94 cents to generate $1 in revenue. The operating margin is negative 3%. The operating margin measures how much profit a company makes on $1 of sales, after paying for variable costs for production such as wages and raw materials, but before paying interest on taxes. In our case, Boeing is losing 3 cents on each generated $1 in revenue, which is obviously not sustainable in the long run. Furthermore, Boeing's free cash flow is negative $4.4 billion in 2019. Free cash flow represents the cash available to creditors and investors in the company after accounting for all operational expenses and investments in capital. So the higher the free cash flow, the more you can pay dividends to the shareholders or buy back stocks or retain the money in the company for future acquisitions. It is no surprise that Boeing announced to cut dividends and stop buybacks lately. Working capital is the difference between current assets and current liabilities. So the higher the working capital, the higher the liquidity of a company to weather bad times. The current ratio is a similar metric and is the ratio between current assets and current liabilities. The higher the current ratio, the more current assets the company has compared to its current liabilities. Boeing has a current ratio of 1.05, which many investors would think is acceptable because they have sufficient assets to fulfill their short-term obligations. I myself prefer a current ratio of above 1.5 to be more on the safe side. Boeing has also a lot of debt, which is worrying me. They have almost 7.3 billion in current debt and another 19.8 billion in long-term debt. The higher your debt burden, the more a company is operating on the edge and is vulnerable to external shocks like the one we have now. Boeing can't sell any planes at the moment, which will lead to a huge loss and erosion of current assets. It is no surprise that Boeing is asking for a government bailout at the moment, which they most likely will get. We will discuss this part in the end of this video. If we compare now Boeing's metrics to the one of Airbus, we can see that both are facing similar problems. Airbus has a lower cost of revenue than Boeing with 85% and a better operating margin with 1%. But Airbus did not have grounding problems with one of their major airplanes. Therefore, they reported a positive cash flow of approximately 1.4 billion euros. A look at both balance sheet metrics shows us that both companies piled on too much debt. Boeing has the better current ratio with 1.05, while Airbus has one of only 0.91. Airbus will most likely need to raise additional cash this year, so it is very likely that they also need a government bailout soon. Overall, if I had to choose between both companies, I would prefer to own Boeing. Boeing's stock price is currently at $151.84 and the market cap is $85.67 billion. Boeing's earnings per share is negative $1.12. That means Boeing is losing $1.12 on each of its outstanding shares. The question remains still whether Boeing is a good buy at $151.84 or not. We just saw that Boeing's numbers for the year 2019 were really bad, but on the other hand, the stock price declined dramatically. To answer our question, let's have a look at some past numbers to see where Boeing could head if things turn around soon. We can see that revenue was quite stagnant between 2014 and 2017 and rose quite sharply in 2018. If we average the growth rate, we will get a 2.8% revenue growth rate. The cost of revenue seems to be between 81% to 85% and the operating margin around 8% when things turn around. We can also see that Boeing was increasing its free cash flow year over year from 2014 to 2018 from approximately 6.6 billion US dollar to 13.5 billion US dollar. But on the other hand, this rise in free cash flow had its price. The current ratio has been declining from 1.4 in 2014 to currently 1.05 in 2019. And total debt increased from 9 billion US dollar to currently staggering 27 billion US dollar in the same period. A lot of the free cash flow went into the pockets of the shareholders in forms of dividends, and another part was used for stock buybacks. While investors profited for a while, the company is left in a worse condition than 2014 now. This should have been a huge red flag for all those Boeing investors who bought last year at all-time highs. Let's have a look at the monthly chart of Boeing and see how the stock buybacks influence Boeing's stock price. We can see the parabolic run-up starting from 2016 to its peak in 2019. Those of you who follow me for a longer period of time know that I preach beware of a parabolic move. They almost always come back to the mean, which they did in Boeing's case right now. If we assume now that Boeing will turn things around and fix the issues with the 737 MAX and traveling is allowed again, we can assume that net income would be at around 5.5 billion US dollar in the next 2 years. With currently 564.23 million shares outstanding, earnings per share would be $9.75. If we take the lowest PE ratio of the last 5 years, which was around 18, we would get the fair value of roughly 175.5 US dollar. I would certainly add a 50% margin of safety, which would factor in the high debt burden and the uncertainties and risks with the 737 MAX and the global issues we are facing now. My ultimate buy price would be then around $88. It's funny that we hit that price when the market started to bottom. What are the risks now? The primary risk in investing in Boeing is its high debt burden, in my opinion. Unfortunately, Boeing took on too much debt over the years to hand out to shareholders in the form of dividends and stock buybacks. Boeing spent 43.44 billion or roughly 74% of its free cash flow on stock buybacks over the last 10 years. This wouldn't be a big problem if Boeing wouldn't have amassed so much debt over the same period. Now, since earnings will decline substantially, credit ratings agencies like Fitch reduced Boeing's credit rating to almost junk, which will make it more expensive and harder for Boeing to get additional money from the markets. The company will have to reduce debt significantly in the coming years, and this will go hand in hand with a total stop of stock buybacks and dividend cuts. We have seen already that stock buybacks were the primary reason for Boeing's rise in share price. Without stock buybacks, expect the price to be range bound for a longer period of time. Boeing is facing now two unexpected problems: the safety problems with the 737 MAX starting in 2019 and the travel bans in 2020. Boeing will need a government bailout, and the terms for that bailout are not clear yet. But I'm very certain that they won't be allowed to buy stocks for a longer period of time, and also don't pay dividends until they pay back the bailout money. Most of the time, the company needs to issue more shares at some point to pay back the bailout money, which will dilute the existing shares. We also don't know how long the travel bans will last and how the whole issue will change people's spending behaviors. There is a small risk that people will fly less in the future and do their vacations in their own country. Furthermore, we don't know how quick the world would get out of the current recession. If people don't have a lot of money, they won't spend it on holidays. Another risk Boeing is facing in the short term is that a lot of airlines most likely will go bankrupt and have to sell their inventory at bargain prices. Those remaining companies will buy cheap older airplanes instead of ordering new ones for a while. Companies like Boeing and also Airbus are very inefficient and remind me of the government itself. I have many friends who work in Airbus and they always complain about the lack of management and organization. No one seems really to care in these companies. I also think they have a lot of overhead and are unlikely to change course until they don't hit the brick wall. What are the chances now? As a good investor, you should know that the best time to buy long term is when prices are depressed and people are scared. We analyze the chances and risks and buy if we think that the chances outweighs the risk. Boeing already has taken some actions to counteract the company's decline. It changed its management, which was more than necessary in my opinion, and should have been done years ago. Dennis Muhlenberg resigned as CEO and David Calhoun took that position. Just judging by the new CEO's pictures, I have a feeling he is an honest guy, which is very important in such a position. Furthermore, it is said that he is a turnaround specialist in his industry, so we will see if he can get the certificate for the 737 MAX and reduce Boeing's pile of debt. He's making the first step by giving up all of his salary until the end of the year, which shows signs of leadership in my opinion. Boeing suspended all stock buybacks and cut dividends. This action is the right move to reduce debt as fast as possible and stabilize the financial health of the company. Boeing applied for a government bailout, which they most likely will get. If Boeing is getting a cash injection for almost zero cost, they can easily pay it back later after bringing the company back on track. Boeing will most likely reduce 10% of its workforce to cut costs. This action will be necessary because it will take some time before Boeing is facing the same demand for its planes than pre-issue, especially if the world is going into longer recession or even depression. Chances are there that at some point by the end of this year or early 2021, the 737 MAX issues are resolved and that the travel bans are gone and life continues again the same way we know it. Human beings are very quick to forget, and after 12 months, the amount of travel might be at the same level than pre-issue if we are lucky. As a long-term investment, Boeing could be an attractive company if it is well managed. So if prices are in the range of 70 to 90 US dollar, I will consider buying for the long term. If the world returns back to normal and Boeing fixes its internal issues, investors could get dividends again and expect solid long-term growth. I think the company just needs a good and vigilant management which is honest and loyal to get back on track. Now is the perfect time to analyze individual stocks and find those companies with a solid moat and which will be also there in the next 10 to 20 years. Evaluate the risks and chances and know at what price you want to buy so you are prepared to pull the trigger when prices reach your target. If you'd like me to make more videos on individual stocks, please hit the like button for the YouTube algorithm, share, subscribe, and leave a comment, which would help tremendously. And please always do your own due diligence. I could be completely wrong in my analysis since I'm no financial advisor. Everything I say in this video is just my own opinion and no financial advice. Thanks guys and see you in the next one. Bye.